Very good evening. You're watching Primetime. I'm Tamanna Inamdar. Let's take a look at the top headlines this evening. It's a surprise. State Bank of India reports a loss for the first time in 17 years. SBI's income from treasury operations falls while the provisions for bad loans has surged higher. Indian markets end the week with sharp losses. Sensex gives away 400 points while Nifty ends lower by 1%. The grass isn't greener elsewhere either. Asian markets end the week with significant losses mirroring those in Europe. US futures, however, point to a higher opening on Wall Street. SEBI bars Indian exchanges from trading their indices on foreign exchanges. Malvinder and Shivinder Singh are said to have taken out more than 500 crore rupees from Fortis Healthcare without the board's consent. Fortis denies the allegations. Rahul Gandhi leads 15 opposition parties in meeting President Ramnath Kovind to seek an independent Supreme Court-monitored SIT probe in Judge Loya's death. And Prime Minister Modi embarks on a 4-day visit to West Asian countries and the Gulf region. Prime Minister will also visit Palestine from India, making it the first ever prime ministerial visit. Well, it's an action-packed day, but let's begin with the big corporate earning of the day. State Bank of India reported a quarterly loss for the first time in 17 years. The surprising number was due to lower income from treasury operations and higher provisioning for NPAs. While asset quality for the bank deteriorated, what stood out was the divergence figure of 23,239 crore rupees, much higher than the RBI's assessment in March last year. Let's first listen in to what SBI Chairman Rajneesh Kumar said in the press conference soon after the results were announced.
Approximately 23,000 crore was the divergence, and provision is about 6,000 crore? Approximately. But when we say divergence, one thing I would like to clarify, that all these assets, 90% of them, they were in the stresses of the... So it is only a question of timing. So where the supervisors feel that in March 17 they should have been classified as NPA, but bank has classified these accounts as NPA in these 9 months.
There was an account of 2,835 which was an NPA before the divergence, June itself, and there is an account which has been upgraded subsequently as well.
And now Vishwanath Nair of Bloomberg Quint breaks down SBI's asset quality picture and sums up the factors that led to SBI posting this loss.
India's largest lender, State Bank of India, has reported a surprise loss of more than 2,400 crore for the quarter ended December 31st, 2017. Now, according to the bank, most of this happened because of a large divergence in the NPA reporting for FY17. Now, as you know, a divergence occurs when the RBI's expectation of gross NPA for a bank and the bank's own expectation of gross NPA for its own books, when there is a wide divergence between the two of them, the banks have to disclose it. Ideally, over 15%, then the banks are forced to disclose it in their results. Now, according to the State Bank of India, this divergence has come into about over 23,000 crore just in the gross NPA segment. As far as net NPA divergences go, they are over 17,500 crore. So, massive divergences coming in from State Bank of India. If you remember, last year in FY16, there were a number of divergences reported by some private sector banks such as Yes Bank as well as ICICI Bank. At that time, the mark for a high divergence was set at close to 5,000 or 6,000 crore. But now with SBI's 23,000 crore divergence coming in, it is clearly outperforming on the NPA front as compared to its private sector peers. Now, what the bank says that is apart from this divergence, there were also issues because of the hardening bond yields. The bank reported an M2M loss of mark-to-market loss of nearly to 3,500 crore, which has also impacted its net profit for the quarter. There was also 700 crore wage revision hike impact that was felt on the provisions for the bank. Now, according to the bank's management, FY18 has been pretty challenging. It has been a challenging year, but FY19 seems to look very good. According to the bank, it will be able to maintain its credit costs at about 2%. That is what the chairman Rajneesh Kumar has been saying. He's saying that the loan growth will also improve along with the MSME and retail loan growth because those will prop up the loan book for the country's largest bank. According to SBI, in FY19 they have an internal target of credit growth of about 10.3%. Now, when asked, the 10.3% seems a little low as compared to some of their private sector peers. SBI says that considering it is the largest bank with a loan book of nearly 19 lakh crore, a 10% growth is still pretty large for a bank of its size. Apart from that, it expects the NPAs to gradually come down and FY19 and 20 to look much, much better than what FY18 is looking like currently.
Well, to talk more about the SBI numbers, I'm joined now by Hemendra Hazari, independent banking analyst. Hemendra, thank you for speaking with us on Primetime this evening. Your first take on the numbers that we've seen?
See, while the loss of SBI has come as a surprise because of rising bond yields, what I think is a very major disappointment, and to me personally, is the NPA divergence that SBI has reported. Because one never expected that India's premier bank and the government's premier bank would have to report RBI divergence. The sad truth today in Indian banking is that all your stalwarts, where banking analysts had much faith in their numbers, HDFC Bank, State Bank of India, are no better or no worse than the likes of ICICI, Axis, Yes Bank. So what does the market, what do investors, what do analysts have to do now? Because if there's going to be such major divergence, then what do we trust? And this is what I find is it's a very sad day today, and it's where the credibility of the accounts comes up under such, so many major question marks.
The SBI chairman in his press conference after the numbers were out did say, and he did try to assure the reporters present there, that the NPA cycle has peaked, things will look much better. Does that comfort you? Do you take that with a pinch of salt?
Yeah, I've been hearing such optimism by bank chairmen, both in the public sector, the private sector, by business media, by numerous banking analysts for some time now. And yet, what have we seen? We have seen the situation only getting worse. I think at least for the next 2 quarters, there is going to be considerable pain for State Bank of India. Because not only are corporate NPAs going to shoot up as they have been, but after that round gets over, you're going to see a round of retail NPAs picking up, because so far the retail NPAs are very less in the system. So I expect the NPA cycle to continue, because according to me, there is hardly any improvement on the ground. And therefore, even the retail NPAs in the Indian banking sector are going to go up.
Well, about 10,000 crores of these divergences are from the power sector. Do you expect to see a similar pattern from other lenders? What are SBI numbers telling us about the industry?
According to me, out of this total divergence that SBI has reported, about 50% has really come from a steel cum power account, which is by and large very well known, which is, I think, JSPL. I also understand that there is Videocon, which is the possible other account. Now, apart from these, also there are other accounts which are going on, you see, and this is the problem today, that a lot of the restructuring that was done some years ago actually should have been identified as NPAs then. And this is what even Mr. Rajneesh Kumar is saying, that the bulk of this is coming from restructured, which only tells you that they should never have been restructured and they should have straight away identified as NPA then, and all efforts for recovery should have started then. Now we've had so many years have gone by, the quality of the asset would have anyway depreciated. So where is the resolution and the recovery for the banks to come? See, all this is really, you have deferred and compounded the problem. And here I believe the RBI has to accept responsibility, because it permitted such relaxation in the norms at that point, and they really just deferred and compounded the problem now.
Just one outlook from you, Mr. Hazari, on the banking sector, and especially PS banks, public sector banks.
The outlook for banks in any economy is the outlook for the economy. Now, according to me, this union budget that we had has provided absolutely no stimulus because total expenditure is projected going downwards, as is the fiscal deficit. But most analysts are, they're applauding fiscal contraction as fiscal prudence. That's only going to continue with the stagnation in the economy. And therefore, the banking sector cannot improve in such an environment because private sector investment demand cannot pick up in such an environment. And therefore, I believe the stagnation which we've had in both investments, in corporate earnings for a couple of years now, and which most people are forecasting, a very short-term recovery in 1 or 2 quarters is going to persist. And analysts should be prepared and investors should be prepared for really a period of stagnation.
All right. Thank you so much, Hemendra Zarif, for speaking with us. And we'll have more earnings action on prime time later on. A whole host of Nifty 50 companies reported their quarterly earnings today, including Tata Steel, ONGC, HPCL and M&M. We'll get you all of those numbers up ahead. So do stay tuned for all of that news coming in. But now a quick glance at how global markets are doing in the last trading day today of this rather significant week for the markets. Asian markets closed lower as an overnight weak close in Wall Street spilled over to other markets as well. Nikkei, Shanghai, Composite and Hang Seng all incurred sharp cuts. European markets trading with slim losses as well. And let's take a look at U.S. markets, which started trading just a few minutes ago. Romain Bostic of Bloomberg News also joins us for the latest. Romain, how is it looking this morning?
Well, I mean, it's been a pain all week, but look, we've got some relief this morning. All 3 of the major averages are higher. In fact, we're up about 2% on the Dow, seeing some really significant gains in the NASDAQ today, as well as in the S&P. But keep in mind, it's not how we open, it's going to be how we close and how traders handle this close. We saw this on Wednesday, we saw this on Thursday. A lot of those gains that we had earlier in the day or midday just couldn't be sustained into the close. So we're going to see what traders are willing to go into the weekend holding or not holding. Keep an eye on some of the big tech names. Seeing a lot of movement up today. Amazon, Apple, Alphabet. I mean, keep in mind, these are all of the big momentum names that sort of pulled this market higher and higher and higher late into the year, early into this year. But those are also the same names that helped pull this market down over the past couple of weeks.
What are analysts and what are investors looking at from U.S. markets and trade during the next week?
Well, next week's going to be interesting. I mean, keep in mind this week there really hasn't been any real fundamental factors driving this market. I mean, there was really no economic data at all. But all of that changes next week. You've got consumer sentiment data, you've got retail sales, you've got housing starts, and of course you've got the big inflation numbers that are going to be coming in. We get the CPI read on Wednesday. That's followed by the producer price read on Thursday. We're looking for about 2% on the CPI. Keep in mind, it was the inflation number that came in on the wage data last Friday that sort of accelerated this sell-off. So it'll be interesting to see what that read is on Wednesday and whether or not that either comforts investors or scares them further into those hedges.
Well, thanks so much for speaking with us, Romain, and have a great weekend. That was Romain Bostic on the U.S. markets, which have opened in the red. Dow Jones, S&P 500 about 4% down, but the NASDAQ is up about 1%. Now, the global market slump has not only hit investors, but billionaires as well. The fall in the markets has wiped out $100 billion from the world's richest people. Jeff Bezos saw his fortune drop by $5.3 billion to $113.2 billion. Berkshire Hathaway chairman Warren Buffett's wealth dropped $3.5 billion, while Facebook's Mark Zuckerberg lost $3.4 billion during the market crash. Of course, the question is, how much did it pinch them? Now, back home in the Lal Street, it was a weak finish to a volatile week. Indian markets ended with sharp cuts, so with Sensex giving away 400 points. The Nifty also fell by over 1%. Neeraj Shah now takes a look at how this week has been.
Well, if you look at what the indices did in the week, 3% apiece, you would think that it was a bad week compared to the rest of the world. Maybe not so bad. The other markets have corrected 7, 8, 10%. So the Asian peers that I'm talking about. So yes, a tough week, but not that terrible. The Nifty Bank, principal culprit, down about almost 4%. A quick check at the broader end of the spectrum, though, the mid caps and the small caps, and you will see that the picture looked quite different. The market breadth wasn't disappointing on most days, including Friday when the markets fell 1%. The broader markets ended in the green. But let's talk about the top losers this week. And it was a sweet pill for most pharma names. Cipla did well, Sun Pharma did well. A clutch of other large cap pharma names had pretty strong gains for themselves all of this week. Moving on, and remember, it was not just about pharma. HPCL may be aided by the strong Q3, but the expectations thereof as well. The results, of course, came out in the last 1 hour on Friday. But the stock did very well for most part of the trading day. What didn't do well were the private financials. So the HDFC twins correcting, and these are heavyweights. When these correct, yes, there is pressure on the market, but others, the other banks, ICICI Bank, Yes Bank, Axis Bank, didn't have the best of weeks as well, 6% apiece for both of these as well. ICICI Bank too had a bit of a fall. What else? At the broader end of the spectrum, some top mid-cap gainers included FDC, Bombay Dyeing, some strong moves there, some result reactions as well that we saw, some stocks in news that reacted, but strong results for Gulf Oil. HEG actually not just results, the whole commentary around the strong pricing environment helping HEG as well. And then moving on, I think while Vakrangi shows that it was down 23%, Friday it went off the lower circuit, which was a big relief for anybody who is trapped in this stock as well. Last but not the least, no relief for some of these pharma names. Poor results, the pricing doesn't look all that robust. Glenmark Pharma, Natco Pharma correcting quite viciously. So there's a bit of a dichotomy between these and large cap pharma. But overall, yes, there were cuts, but it looked a lot better than what it looked across the Asian peer screen.
All right, in the other big story, and it's been a power-packed evening, there won't be any more SGX Nifty. The market regulator SEBI has barred Indian exchanges from sharing data on indices traded on their platform with any foreign exchange. Sajit Mangat is with me to explain that story and its impact. Sajit?
Yeah, thanks, Tamanna. You know, this is something which has been brewing with the stock exchanges and the regulator, and finally there has been a joint statement made by the stock exchanges that henceforth they will not be licensing any of the Indian indices or providing data with respect to Indian securities to any foreign exchange, so that any offshore derivative instrument or for that one indices or stocks can be traded on that platform. I think we have with us Mr. Vikram Lame, MD and CEO of NSE. Mr. Lame, thank you very much for joining us. Can you tell us, what is the kind of timeline we are seeing for withdrawal of all the exchange traded or in indices in various exchanges?
So as a start, what I want to say is that this is something that I've said before as well in the public domain, that there has been a concern about liquidity building offshore, which is not good for Indian markets. So what we've done is, obviously, there have been conversations ongoing on this front, and we've tried to take a series of steps to try and see how we can consolidate liquidity in India. So there are two things that have been done, broadly speaking. One is any kind of licensing arrangement for an index that is being used for offshore derivatives trading. Those arrangements will get terminated. The second thing that we've done is that end use of data that is obtained from the exchange, whether by market participants or data vendors or other exchanges, etc., that data we are saying cannot be used for pricing, trading or settlement of any offshore derivatives contract. So those are two things that we believe will prevent any kind of offshore derivatives trading on Indian securities that can happen going forward. So as far as our own Nifty license is concerned with Singapore, that will also get terminated as part of this announcement that we've made. That has a notice period of 6 months as part of the agreement. So we will obviously have to give them an appropriate notice period for the agreement before the contract terminates.
We earlier this week we saw stock futures started trading in the SGX, and we saw some bit of turnover coming in, at least 30 stocks of the 50 stocks. I know it's early days for that. By the time do you see that there will be any other way of offshore structured instrument that may get into in the overseas market? And are there any exceptions to this entire order which has been put out?
So I think we don't expect any kind of, I don't know what people might do or can do, etc. But the limited point is if there is a way that people have to still go ahead and trade offshore derivatives on Indian securities, we will revisit the framework and see what else we need to do to control that and bring liquidity back. So we'll see how the situation evolves. What we have certainly said as part of our release is that we will continue with all our arrangements with other index providers, etc., to the extent that the index is being used for raising ETF money, which we obviously do not want to curb, because that is good for Indian markets, because that ETF money will result in money being invested in India. So we are not restricting sharing of data with any index that is being used for raising ETF money. But if the index is being used, or the price or the data is being used for any offshore derivatives contract, that we are saying cannot happen.
Mr. Lemay, I know this is a very bold move from the exchanges and from NSE's point of view, because you do get a large amount of licensing fee for Nifty, and of the licensing fee which comes from indices, nearly 80-90% of that fee comes from SGX. What is the kind of revenue impact that NSE is willing to take, and do you see that entire volume which is now built up in Singapore will eventually move back to India?
So to answer the second question first, that is certainly the hope and the objective of the exercise, that any kind of offshore liquidity that is building in other jurisdictions comes back to India, because there is a viable alternative for people who are trading in Singapore or Dubai or wherever else to actually trade in India or to trade in Gift City. So there are alternative avenues available for people to trade beyond where they may be trading today. So that's point number one. Second, I can't get into the specifics of how much we earn from the Nifty Singapore license, but all I can say is that we will do what is in the best interests of Indian markets. And from that perspective, even if it means that there is a revenue hit for us, we have decided to take that call, because we do believe that consolidating liquidity in India is the right thing to do and is in the best interest of Indian market.
There is also an exception to the IFSC, right? In that sense, this entire order doesn't...
Yeah, exactly.
So what is the rationale for that particular purpose?
See, the rationale for that is it is something that from a policy perspective, we have said that it is something that we want to encourage, something that we want to build. And if for some reason people believe that they want a dollar contract and they want to do something in offshore in an offshore jurisdiction, we have provided an offshore jurisdiction in India. So we don't want to discourage that from developing. And therefore, if there are some players who, rather than trading onshore in India directly on Nifty or single stock, etc., prefer that they trade in an international jurisdiction because there are tax advantages, etc., then we have an alternate avenue available in Gift City for them to do that. So we have obviously carved that out from any kind of restriction.
What is the realistic, because we have an offshore, jurisdiction in India in the form of IFSC. Do you see a significant amount of volume moving to IFSC? And you must have done a transaction cost analysis between what is the kind of transaction cost that exists for any player in IFSC versus a Singapore Stock Exchange?
No, see, whether liquidity builds in Gift City or not, time will tell, right? It's very hard for me to say whether liquidity moves back to India onshore or it moves to Gift. I don't know. We'll have to see how it evolves. And so that I don't have an answer today. The second question you had was surrounding
the transaction cost. The transaction cost.
Transaction cost. So now in Gift City, because the short-term capital gains tax has been removed from Gift City, which was the case till this budget announcement. Obviously, it was not competitive with international jurisdictions from a tax perspective. Now that it has been removed, obviously it is more attractive and competitive. There is still a minimum alternative tax that is levied in Gift City, which doesn't exist in offshore jurisdictions, but that is not such a large amount that would dissuade people from trading in Gift if they wanted to do that.
One of the major incentives which is there for any player trading in SGX is the kind of dollar index and the dollar denominated contracts which are there, and that reduces the translation risk or the foreign exchange risk which is there for foreign investors. Do you see more dollar denominated contracts coming in either on the main board or in the GIFT City?
No, see, onshore we cannot offer dollar contracts, obviously, but in GIFT City they are all dollar contracts. So the GIFT City framework is the equivalent of whether you are in Singapore or Dubai or somewhere else where dollar contracts may be offered.
Yeah.
But in India we cannot offer dollar contracts.
Can you offer the same kind of product in GIFT City, like a Nifty 50 in GIFT City, because you have a different?
We already have that even in GIFT City.
So that should be a good incentive for foreign investors.
Yeah, because it's the same contract in dollar terms, which is traded on Singapore or somewhere else.
And there is a grandfathering which has been done for 1 month, but in the case of SGX, you said it's going to be 6 months before you are able to do it.
Grandfathering, if you read, what we've said is different contracts will have different notice periods, right? So you have to obviously comply with your legal obligations under a contract. So we may have 6 months, somebody else might have 4 months. So it will have to be whatever your contractual obligations are.
Okay.
Yeah.
So that means beyond 6 months you won't be able to issue any contracts, or if the contracts gets expired as and when it happens?
No. If it expires, then it expires. But our licensing agreement with SGX on Nifty will not expire in 6 months because it was renewed only last year.
Okay.
So we will obviously have to issue a notice to them that it will terminate in 6 months.
Mr. Lemay, you've been in touch with the Singapore Stock Exchange for a while, and we've been discussing that as well. What has been their, view on this entire issue? Because this is an extreme measure taken by the Indian exchanges.
So we obviously have a very good relationship with Singapore, and therefore there have been conversations ongoing. I have alerted them to the concerns that we have from a country perspective in terms of liquidity moving offshore. They obviously understand that. I have also sounded them on the fact that there will be certain decisions that will be taken to consolidate liquidity in India. So this does not come as a surprise to them. We have also spoken to them after this press release has gone out. So we will continue our dialogue with SGX and see how we can collaborate and see how liquidity can move to India or to GIFT City.
You also have a licensing agreement with other stock exchanges side. What happens to them? Will they also take 6 months, or is it much?
No, the different agreements have different termination clauses in terms of notice period. So we also have an agreement with Osaka, Taiwan, and I think CME. Yeah. But they are different. So we will have to just comply with. But it doesn't go up to 6 months. They are shorter than that, from what I understand. But I don't know the specifics of. They are not large also in terms of liquidity and business or any of that.
So is it it's fair to say that there won't be any contracts issued beyond July 31st? That's the last contract that could be issued on the SGX platform, right?
July 31st, whatever 6 months is.
Yeah, means from here.
Yeah, so we're in February, na? So July kaise August hoga, na?
Okay, August. So August would be the last one which would be there basically.
By August, once we issue them our notice, obviously we've issued the press release today. Yeah. So on Monday or whatever it is, we will have to issue formal letters to various people, including SGX, including data vendors, etc., on end-use restrictions of data. And then obviously the notice period begins from when we issue these letters.
There is also one clause which is mentioned here with respect to end of the day data and final settlement prices of securities. Yeah. Now you're talking about those will be displayed on the exchange website and forwarded to media organizations 2 hours after close of market. What has been the earlier thing, and what is the change here? If you can explain to us that clause.
No, this is just a clause that says that the settlement prices, etc., that get put up will be done 2 hours after close of market. But basically, we will forward all the data to media and all the other things. It's only about the final settlement prices of securities that we display on the exchange website will be 2 hours after close of market.
Okay, so this basically procedural thing which is being put in. Yeah. Mr. Lemay, thank you very much for joining us today.
Thank you very much. Thank you.
Well, Sajid, they're speaking with Vikram Lemay, and in that conversation, just one point, Sajid, Vikram Lemay said again and again that this is for the benefit of Indian markets. What about from the investor's point of view? Because there are less options now, isn't it?
Well, why did the liquidity move to Singapore? One was the tax reason. The other one was promissory notes or people coming through offshore derivative instrument via the Singapore route, and they were able to trade there. So now that won't be allowed. Remember that SEBI has already barred positions in the ODI instrument for investment into the Indian market, especially for Nifty in the derivative market. So any money which will come into the derivative market will be much more, scrutinized by the regulator, and you will have to be a registered participant to be investing in a derivative market. The government is very worried with respect to the kind of reaction that budget had. Most of it was as a result of the global market conditions. But point is that the market has been going up for a while, and there is some heated. There are now people talking about that there has to be some correction, and they don't want this offshore thing to create anything. But again, it's a 6-month process, so whether the correction is going to happen in the next 10 days or 15 days or 1 month, what we're going to see is that over a period of next 3 to 4 months, there will be a winding down of process, winding down of positions going to happen in Singapore, and finally some positions will come in. In the meantime, I think foreign investors who are coming to Singapore will have to get registered in India and start investing here, or through the GIFT City, where there is a dollar-denominated contract, though the cost might be slightly higher because of the MAT, as Mr. Lemay mentioned. But again, it is something which they will have to take a call on, whether they want to come for the GIFT City or to the main board in rupee terms, and whether those options are as attractive. Exactly. Okay, thanks so much, Sajid, for the analysis on that big story. Another big story today, Malvinder and Shivinder Singh are said to have withdrawn more than 500 crore rupees from Fortis Healthcare without the board's approval. Bloomberg News' George Smith Alexander sums up the details of that story.
So from what we understand is that both the brothers have taken out at least around 500 crores from the balance sheet of Fortis. So because of this, if you look at it, Deloitte hasn't signed out on the balance sheet both for the second quarter till date. Normally these balance sheets come out by these results come out by November, and it's been now 2 months overdue. So what we also understand is that that these funds were mentioned as cash and cash equivalent in the balance sheet of Fortis, but what the company says is that these were loans which were given to some companies, and these companies after some time they were taken over by the promoter group companies, and they became promoter companies, so they became as third-party transactions effectively afterwards.
Well, we're going to talk a bit more about the Singh brothers up ahead on the show. On Primetime Debate, I'll be joined by J.N. Gupta, former Executive Director of SEBI, and Sanjay Asher, Senior Partner at Crawford Bailey. So do tune in for that conversation. And Congress President Rahul Gandhi, along with representatives from 15 opposition parties, met President Ramnath Kovind today, seeking an independent Supreme Court-monitored SIT inquiry into the death of Justice Loya. In a press conference after the meeting, Gandhi said that there was a sense of discomfort in Parliament over the direction that the case was taking.
There's a feeling in the Parliament House, as I said, large numbers of MPs both in the Rajya Sabha and the Lok Sabha, 114 of them, felt a sense of discomfort. They felt that a judge of the High Court has died, district court has, special CBI, has died under suspicious circumstances. And it is owed to that judge and his family that the investigation should be done properly and effectively. This feeling was expressed to us by different parties and by large numbers of members of Parliament. So we decided to take this feeling and give it to the President.
And Finance Minister Arun Jaitley has hit out at P. Chidambaram's remark on the economic advisor being a good doctor. This is in the budget session, which saw another day of heated debates. Do take a look.
When this illustration is given, that In the chief economic advisor, you have a very good doctor, but you are a terrible patient. Let me tell you, even if there is a bad case and you have a good doctor, he'll probably end up curing it. What did we do for those 10 years from 4 to 14 when you had a terrible doctor? And when you had a terrible doctor, even the healthiest of patients is likely to disappear.
Now, Kerala has topped the health index report prepared by Niti Aayog, while Uttar Pradesh appeared at the bottom among larger states. However, Uttar Pradesh has shown improvement in the recent past. Kerala is followed by Punjab, which has moved up 3 places. This is the health report that the Niti Aayog has put out today. Tamil Nadu and Gujarat, meanwhile, moved down by a place and occupy the 3rd and 4th slots. Besides Uttar Pradesh, Rajasthan, Bihar and Odisha were among the states that performed poorly in the health index. So which states have improved the most among the large states? Well, Jharkhand, Jammu and Kashmir and Uttar Pradesh are the top 3 states in terms of annual incremental performance. And based on sexual harassment complaints filed with the National Commission for Women, Mumbai police have arrested seed fund managing partner and angel investor Mahesh Murthy earlier today. Murthy is accused of harassing a Delhi-based woman who complained to the National Commission of Women in 2017, after which a case was registered on the 30th of December 2017. And Mahesh Murthy, in a statement to Bloomberg Quint, said, and I quote, "I received an anticipatory bail in this case some time ago. I'm told it is a procedural technical arrest and that I will be released on the bail granted earlier right away. I am cooperating with the police and will continue to defend myself in the courts to the fullest of my ability." Prime Minister Modi began his visit to 3 West Asian countries today, including Palestine. He is expected to hold talks on deepening cooperation in strategic areas such as security and trade. PM's first stop will be from Palestine tomorrow after transiting through Jordan, where he will meet King Abdullah II. He will then meet Palestinian President Mahmoud Abbas and Prime Minister of UAE as well. PM Modi will then visit Oman on February 11th and 12th. This is PM Modi's 5th visit to the Gulf and West Asian region since 2015. But the important bit, he's the first ever Prime Minister to visit Palestine on an official visit. Ahead of the visit, Modi said Palestine is a valued strategic partner. He will also address the 6th edition of the World Government Summit in Dubai. India is the guest country in the summit. Well, let's talk a bit more about the Palestine visit and its importance. A.K. Pasha, Director of Gulf Studies Program in the School of International Studies, JNU, now joins us on the phone line for more. Mr. Pasha, thank you so much for joining us. With this visit, de-linked from the visit to Israel earlier, has this government successfully managed to de-hyphenate its relationship with Israel and with Palestine?
You see, since we recognized the PLO in 1975 and the Palestinian state in 98, since 1992, all prime ministers and leaders have tried to balance our growing relations with Israel with the continued support to Palestine. And Prime Minister Modi also will be flagging openly for the first time that hyphenation firmly and continuing the Indian policy. Every time we add a new dimension or improve our relations with Israel, we have shown sufficient courage to balance it with support to Palestine, and it has to be seen in that manner, because Benjamin Netanyahu came here recently, and although the trade is just about little over $4 billion, which is just 10% with the United Arab Emirates. But in terms of military cooperation and strategic cooperation, it is there. And this is to balance our relations with the Arab world, Muslim world. He is going to Palestine.
It is being reported so far, Mr. Pasha, that the visit to Palestine will focus on a lot of humanitarian aid that India provides. I want to just contrast it with our relation with Israel right now, where we're actually a big shopper, especially in the defense space. How are we managing these two very different relationships looking at the context and the history that these two nations have with each other?
No, our relations with Israel stand alone, independent as arms supplier and in science and technology cooperation with Israel, because they have achieved notable success. But the significance with Palestine is we are working hard to contribute in their capacity building. Prime Minister will be inaugurating a diplomatic institute for which we have contributed about $5 million, where Palestinian diplomats will be treated and software engineering colleges, training programs, and also recently President Trump announced the withdrawal of about 65 million out of the 125 million in annual support to the United Nations Relief and Works Agency for Palestinian refugees in the Near East, and has decided to freeze additional $45 million, which was authorized in December, for food to the refugees in Gaza and West Bank. So under these circumstances, the Palestinians feel squeezed, and India has, in a very grand gesture, announced that it will be making initially $1.25 million to the Palestinians, and to supplement the EU's additional 52 million euros which they will be giving. So this is something very significant that Prime Minister Modi is emphasizing on information technology, capacity building, diplomatic institute, library, so on and so forth, giving a message that we are interested in the long-term capacity building capacity of the Palestinians, notwithstanding the difficult circumstances imposed by the Israelis as far as Palestinian life is concerned in West Bank and Gaza.
All right, thank you so much, Mr. Pasha, for speaking with us here on Prime Time. And that's all the time we have on Prime Time, but Prime Time debate up next, where we talk about that big Bloomberg exclusive. Singh brothers are in trouble again. JN Gupta and Sanjay Asher are joining me right up next. Stay tuned.